Hello and welcome to the market update video with myself, Dave Madden. Earlier today we saw a very impressive US non-farm payrolls report. The headline figure came in at 528,000, absolutely smashing the 250,000 that economists were expecting. In addition to that, the unemployment rate ticked down to 3.5%, while economists were anticipating it to hold steady at 3.6%. Now, because of the very robust jobs data from the United States, there's been increased speculation that the Federal Reserve might look to continue down the path of having large interest rate hikes, and as a result of that we've seen a decline in the stock markets here in Europe and also in the US, particularly the US tech sector. The Nasdaq 100 is the underperformer of the US bunch. The US dollar is rising on the back of the strong unemployment numbers. We've seen large sell-offs in euro dollar, pound dollar and also in Aussie dollar. Turning our attention to metals, we already saw early declines in gold and silver in advance of the US jobs numbers, and those losses have been accelerated, particularly in silver. The strong US dollar is really hammering gold and silver.
The UT 100 has come under selling pressure following the announcement of the well-received US non-farm payrolls report. Looking at the MACD indicator, we can see that momentum has swung from positive territory to negative territory, implying that bears are now in control. The RSI is moving lower as well, suggesting the price bias is to the downside. If you do see a continuation in the short-term downward move in the UT 100, it might find support from this simple moving average here, which comes to play at 12,889, and a break below that could see a target this zone here at 12,795. Even though the short-term trend for the market is lower, it's worth noting the more medium-term and longer-term trend for the market is higher. In fact, earlier this morning, the market at its highest level in 3 months. If the UT 100 manages to hold above this simple moving average here, which comes to play at 12,889, that could be an early indication that the more medium-term upward trend is still in effect. If we do see a rally in the market from here, it might look to retest 13,336, and a break beyond that could see a target 13,355.
Turning our attention to oil, WTI has fallen to its lowest level since early February. There's a combination of factors at play here, partially due to concerns about the health of the global economy. There are some fears about high levels of inflation, and there are actually now extra fears about further interest rate hikes in light of the strong US jobs number.